Ladies and gentlemen, we are back with the Lighthouse podcast. As always, alongside my good friend, co-host, Alex Camargo. How are you today, Alex?
Doing well.
All right. In today's episode, we're going to be talking about mortgages. We have our good friend, Rafael de Souza, in the house today. This guy's been doing mortgages for 10 years. Don't let his young looks fool you.
He's 23.
I wish.
He's been doing mortgage for over a decade. We've decided to have him in today because it's someone that we work with quite a bit, and we're going to be talking about current matters, rates, what's going on in the market right now. But without further ado, let's jump right into it. Welcome, Rafael. Thank you so much for being here today.
Thanks, Danny.
I know it's a little bit of a drive for you. What, like
long
a couple
trip,
hours?
right?
Yeah, long trip, 3 hours, but it's worth it, guys. It's worth it.
Is it from his Boston house or from his Florida house?
I
Because like
wish.
we can.
Yeah.
Business is good.
And so appreciate you being here today.
Yeah.
Let's start with the question that will not silent itself, which is rates. What's going on with the market right now regarding rates?
Yeah, there's obviously been a rate spike. You know, I mean, it's no secret to anybody. And a lot of the times when we have these rate spikes, people start to believe that because there's rate spikes, our economy is going to waste. Our economy is gonna be like 2008. And a lot of the times it's understandable for people to feel this way, you know, but it doesn't necessarily mean that because they feel this way, it's necessarily true. You know, what happened in 2008, as most people know, we obviously went to a crisis due to the housing market. It was huge because people were getting into what we call unsafe mortgage loans, you know, and today, the world we live in today, it's very different. You know, it's things are very much more bureaucratic than they once were, you know, at the time. And I know we talk about this a lot, especially Danny, but at the time, people, you know, if, you know, you had a dog in your household and you wanted to write a loan application in your dog's name, they can qualify if they said that they barked for $10,000, you know. But in reality, nowadays, you can't, you know, you wouldn't be able to apply for a mortgage loan. They have to look at income. They have to make sure that you're able to pay for that loan. They have to look at your credit. They have to look at your income history. So these things are important. So the situation with whatever the housing market is going through now is it's not just based off the housing market alone. You know, obviously costs of goods have gone up, especially after the pandemic. So, you know, obviously once things become more expensive, you have to charge more. And because of this, you know, we're starting to see rate spikes as well. The situation is this, though. The housing market, it's a lot of the times what people don't understand is that recessions are needed. You know, recessions are required in what we do. So in recessions, why are they needed? Is because if the housing market begins to rise too high compared to what people's income is rising to, what happens is creates a lot of inflation, right? And inflation is basically when we can't afford no longer what the offer or the market is offering us, you know. And because of this, what happens is that will create a crisis in our economy. So what does the government have to do? The government, they have to increase prices in order for them to stop demand. You know, in order for them to stop demand so that the inflation rate in whatever the United States was, which actually I believe had surpassed about 9%. And we are starting to see a decrease already in the inflation rate. And they stop demand for some time so that they can get to a normal inflation rate. So it stops the demand. That way people are still able to afford what they're buying. So it's necessary. So to me, these markets, even though, you know, obviously we're not getting the better of the rate that we once did back during pandemic times, it doesn't mean that we're going into what we would call a crisis in our economy.
Yeah. And there's so much equity in the homes that it'll take, you know, a 20-30% drop in price for crisis to actually happen, because, you know, if you see that it's not going, if you see that the market is going in a direction that you don't like, and if you put your house on the market now, you're not in the red, you're still in the green, you're still going to make money off of it. So just sell it, you know, if you believe it's going in that direction.
Correct. Yeah. That's 100% true. The situation is, I was actually looking at a chart the other day, And it was a chart comparing what the prices had dropped to back in 2008 and compared to other recession times. And the chart of 2008 obviously went really to negative, like you said, within that 20 or 30% range, as compared to what we're seeing in normal times of recession, where we're looking at still an increase, but a very slow increase of like 3, 4, 5, 6%.
Yeah.
So it's like, and the times that we're living in right now is very much similar to that. Yeah. If you compare the numbers, it still looks very similar to what the normal recession periods were. And the problem is that because we were still recovering from the economic crisis back in 2008, this recession period took a little bit longer in order for it to take place. Yeah. You know, because until the prices caught up to what it was back in 2008 and then increased within that time span, what happens is that the recession or the period of growth took longer, which was great. Yeah. You know, but people forget that we need the recession period in order for us to continue understanding the supply and demand, you know, chart in the U.S. So.
Yeah, and then you're also, I think what we have now, and we have this conversation openly with a lot of our clients, is we have spoiled clients who look back at how much a house cost 10 years ago.
Oh, yeah.
Peanuts. Right. And then we also have the same spoiled clients looking back at what rates were a year ago.
Yeah.
At a 2.5, 2 3/4, less than 3%.
Yeah.
But like these numbers are unprecedented and not bound to happen anytime soon. Exactly. Right. Again, you know, rates were that low because we needed to get this economy going and we needed to. And real estate was a channel to keep this economy going. So if you can lower interest rates and to get more people buying at a time where everybody's freaking out what's going to happen with COVID here and there, we needed to work on the economy to keep it going so people wouldn't freak out and then cause another crash just like it happened in 2008. So it was a smart decision, in my opinion, to lower the rates at that point. But also, those rates are not sustainable, right?
They're not.
My personal opinion is sustainable rates in mortgage are 4.5%. That's sustainable. Banks can still make money, and people can still buy without a problem. And of course, because it was so low, now we need to bring them up just to make up for that. Like you said, slow down everything, even slow down new construction a little bit, so we can get better material prices. And as a result, lumber prices are dropping drastically, which is good. We need that. Yeah.
No, 100%. You know, costs, they were expected to go up. Yeah. This hasn't really come with much of a surprise, I would say. Maybe the only one surprise that we could have had, Alex, I think, was probably the situation that it happened so quickly. Yeah. In the state that, I mean, maybe it was required at the time, because a lot of the times, you know, all we can deal is with expectation as to when it's going to happen. If the market is still fluctuating towards a positive, then we're going to, you know, continue to ride that wave or whatever. But the reality of is if you were able to get such a great rate, you know, good for you, you know. Yeah. But that shouldn't scare you into going into the housing market, or in the situation to go to the possibility to invest in the market. In today's time, you know, it doesn't mean you're going to be doing a bad deal. Yes, the rate is going to cost you more, but it doesn't. People forget that, you know, refinances are there for a reason as well. Yeah. You know, and you don't want to lose the opportunity on a possible good deal today. Yeah. Yeah. You know,
and I've mentioned this before here at another podcast that we did, that if you look at the numbers throughout history, rates were always good. People were always happy with where they are now. And I think, Alex, to what you were saying, you know, those people that are complaining about the houses not being the price that they were 10 years ago, and the rates that how they were a year ago. But then, like, what are they going to do? Because rents are through the roof.
Out of everything that's come up, rental has come up the most.
And rental does not go down.
Yeah, rental does not go down. When did you ever get a landlord that says, hey, next month, $200 less? You never see that happening. So I have another question for you regarding, you know, we all know that everything happened so fast, mainly because of COVID, right?
Right.
They had to drop the rates and all the exodus of many people out of the big cities, New York City, for example. Like we had, Alex and I were talking about this not too long ago, and usually like a couple thousand people move into our area every year, and we had like that one year was like over 40,000 people, right? So we understand that the prices went up because of supply and demand, right?
More people moving in.
Moving in. And a lot of people was like, how are all these people buying all these houses? And like on the other side of that coin is it's really hard to get a loan these days, just like you were saying.
Yeah.
So the people who are buying these properties, they can actually afford them, right?
Right.
So do you think, what do you think? Do you think there's going to be like a correction in price in the price of homes? And do you think that we're going to, like Alex and I were talking about this yesterday, and he feels 10% within the next 12 months, 20% within the next 24 months. What's your take on that? Do you think so?
It's price corrections, they do happen. We're not going to, we're going to see 10, 20% decreases like people are going to expect in order for them to purchase these homes. Now, one thing I'm going to mention to your situation that I noticed a lot, especially after the pandemic. You guys may not remember this, but 4, maybe 5 years ago, we sat down and I asked you a question. I was like, because I wasn't very familiar with the Connecticut market at that time. And then I mentioned to you, I was like, how is the Connecticut market now? Because at the time that we were talking about Connecticut, it wasn't still extremely expensive, you know, and it's still, in my personal opinion, there's a lot of great areas. Doesn't compare to
Boston
right now, you know, in terms of price ranges. Yeah. And then you guys were telling me, you were explaining to me, you were like, Rafael, Connecticut is just now coming back up with their prices as compared to back when it was in 2008. But I was amazed by that because Connecticut,
before 2008.
Correct. Because so Connecticut's prices were just finally coming back to what it was back then. And then what happened was I was amazed because, you know, for example, obviously I live in Boston, and Boston is so close to Connecticut, but Boston had already surpassed the amounts at the time that we were speaking. And I'm like, wait, so you're telling me the price? So from that moment, I understood that Connecticut was going to skyrocket the following years. And that's exactly...
You just never told us.
It's not like you guys didn't already know. But the reality is that, like, I was like, Connecticut is going to grow now a lot. And that goes a lot in terms of the supply and demand that you were getting into. For example, people moving in. So what happened, especially after the pandemic, places like New York, Boston, these places are really expensive, right? So what are people going to do? They're going to obviously move into different places that they feel more comfortable, that they feel better, and they're going to move to these places that are more affordable, you know? And Connecticut obviously had a great deal of that, especially after pandemic times, you know, and you know, people, I believe they learned to do something different during pandemic times, which is they learned to work remotely, you know? So what happens is if you're able to work remotely, maybe you don't want to live where you're living. Maybe you want to live somewhere that you feel is better for you. Yeah. You know, and Connecticut is a very attractive area, you know.
Bigger house, bigger yard.
Exactly, more space, you know.
And a lot less.
And not very far from New York, as many people from New York moving into Connecticut, like Danny said, you know. So it's like, you know, you're going to get a lot more house, like you said, for a lot less. Now, in the situation where I see a recession coming, a recession that is here, but in terms of the price changes, like you said, I believe that on average, it could have like a small decrease depending on how much people go into it. But I believe it might hurt more areas that completely skyrocketed, like New York or Boston, that absolutely went over the hills in terms of prices. But other locations, I don't feel like they could take a huge hit. But I don't see those decreases going anywhere near where people are expecting, even if they were to happen. I truly believe that house prices are going to remain more or less the same where they are. Yeah.
With increases in interest, right? What's been happening, what we can see that's been happening mostly is it's not that buyers don't want to buy because interest rates went up, is they can no longer afford. Correct. Because now it affects their debt to income ratios. Right. you work at a company where you have tons of different products. How are you getting creative with your clients to still get them into a home?
Yeah, well, I mean, as the market changes, so does the mortgage industry. You know, the mortgage industry needs to keep making programs that are attractive to the consumer, obviously. So now it's very common now especially for homeowners who maybe have already purchased a home in the past or have owned a home within the last 24 months, they can still purchase properties as long as they're willing to give a higher down payment without income verification, but there is a credit checks, in order for them to qualify. There's also different ways now, especially for self-employed borrowers. Self-employed borrowers now, they can qualify as well using bank statements. Down payments could fluctuate anywhere near probably around 10% using their bank statements. And it's become very attractive programs for people because what they didn't realize is that, let's be honest, a lot of people, when they are self-employed, they want to declare as much expenses as possible on their income tax. Yeah. But it also comes with the benefit that they also deposit a lot of money in their bank account, obviously because of work and everything. So what happens is that when a bank verifies and does the profit and loss for that client, when they look at the bank statements, they're able to use potential higher incomes compared to whatever
they
actually reported on their income tax.
Yeah.
So a lot of the times they can get a lot more house than they were expecting to while just using an income tax return and being able to qualify for something, even in some cases higher than they were expecting.
What about adjustable rate mortgages?
It's
you see those coming back?
Adjustable rate mortgages are coming back.
Yeah.
People think that adjustable rate mortgages is what caused our crisis back in 08. In reality, what caused that crisis back in 08 was subprime loans. And subprime loans were very, very risky loans that basically people would get into 1 year fixed rates and then, or half, you guys know, half year, 1 year, sometimes maybe a little bit more than that. And then it would fluctuate based off.
It'd be variable after that, right?
Exactly. Yeah. Now, ARMs, whereas
7-1.
7-1, 5-1. So you can hold on to the property for 5 years, fixed rate, 7 years. And they, do they come with more risk as compared to a 30-year fixed rate? Yes, they do. But it also depends on what you're going to use that property for. A lot of the times sometimes they buy a property with the intention that they maybe want to sell within 5 years, 7 years, which is the lifespan of whatever that fixed rate is going to be. And then you ask me, okay, so what are the advantages of having some type of, adjustable rate mortgage? The advantages is that you're going to get a cheaper rate as compared to whatever the market is.
And it beats paying rent.
Oh,
cheaper than rent.
100%. 100%. I mean, the most cliche thing that everybody says, like, you pay 100% interest on rental payments. Yeah. So, that's the reality. Anything's better than rent.
Yeah. I don't know it was that cliche because I use it all the time.
Oh, now you do.
Yeah, so you serve Connecticut, Boston, and Florida for the most part? Yeah, most part Connecticut, Boston, Florida. I've entered into South Carolina, Rhode Island as well. So New Hampshire is another area that I work a lot in. But my main markets today would probably be Boston, Connecticut, and Florida. All right, so if someone is watching this, and they feel a little bit like, oh, but I'm not going to see this person, whatever the case may be, they could feel secure that it's okay just doing everything by phone or emails and everything like that. Because for us, it's a bit hard because, we have to show homes and we have to be there for inspections and everything like that. But I just think that like I was mentioning before, the cameras were on, that I'm working with a client that is the person who's doing their loan is out of California and is smooth, there's no problem there. Yeah. There's obviously this trend now, obviously more that most people don't really see the loan officer anymore. But at the end of the day, some people do like to see who they're dealing with, And not the millennials, right? No, millennials do not care. Yeah. They don't care to see your face. Now, the baby boomers, they probably feel a little bit, they have obviously more of that conservative mindset or traditional mindset, I like to say, where they probably won't want to see you, know who they're dealing with, know who they're sending documentation
to. Find a storefront somewhere.
Exactly. Yeah. So, I mean, some people need to see how blessed we were as well, even during difficult times, we were still able to dribble during difficult times, certain situations, especially during the pandemic, because obviously with the whole situation as to what happened back in COVID, people couldn't see anybody, because we were social distancing and everything. And obviously now there's new ways that you can still see people. For example, there's obviously FaceTime. One way that I always, schedule my clients, especially if they want to see me, I do Zoom calls with them, which is very easy. All I do is I send them a link, especially if they're not tech savvy. They just press the link, boom, I'm right there. Yeah. I may not be as good looking as Danny or Alex, but it helps. And, for them to see who they're dealing with, who they're sending their documentation to. And it's important. Some people don't feel the need as long as they hear your voice on the phone. Some people just email you. They see your contact information online, and
some people live such a fast-paced life that they don't have the time to even, it's whatever. I'll send this by email.
They just want to get the pre-approval. But now there's many ways that we can meet up. I mean, heck, if you tell me, hey, look, listen, I'll close a deal with you on a property, but you need, I'll fly over depending where you are and I'll meet you there. But for the most part,
go where the money goes.
Yeah, we'll go there.
Yeah, none of the clients that we worked with, I feel you've ever met them in person. Like it was all like
most of them. I mean, I obviously once after we close, you get invites and they want you to celebrate with them too. But yeah, I mean, for the most part, even the ones that live closer to me, we generally don't really see them as much. We're like we're kind of hidden in the shadows sometimes, but
you just show me the money. That's all.
That's it. That's how people look at it.
Now tell us, who is. Let's put the work stuff aside. Who's Rafael? Like, tell us a little bit about your life story.
Oh, man, you want to get deep. You want to get profound. Well, Rafael, who is Rafael? That's a good question.
See, he knew everything about mortgage, but when I ask him about himself,
he's not too sure about like.
Rafael is I'm a Brazilian immigrant. I am now a U.S. citizen. So I can proudly wear 2 flags on my chest now.
Congratulations.
Thank you.
Congrats. When did you get that done?
It's been some time now. It's been a few years
amazing.
Now. But I came to the U.S. when I was 4 years old, just about between 3 and 4 years old. And, you never lose sight of your origin or where you came from. So I love my culture, my Brazilian culture. I also love the American culture, but Rafael was somebody who needed to mature at a very young age, because as most people know, once you come here as an immigrant, immigrants especially, they have similar backstories in different ways, but they have similar backstories. And the reality is that we go through, we all have that story of hardship. I would say most of us share these stories of hardship, and it's not very different with me. And, obviously when I moved here with my family, the idea was for us to, make some money at the time, pay off debts in Brazil, and maybe return within a few years. And then you start realizing
30 years later,
you're still here. And, and reality is you kind of, shift to whatever the culture is. It's amazing to see a place that you see that works, In America, it does. Things do work. Yeah. And it's great to be a part of this. And, long story short, my story really began for my life, especially in the crash of 07, 08. And the crash of 07, 08, my family lost everything completely. We lost our house, My mother at the time was working as a realtor, which was probably the worst job to have during that crash, potentially. And, from one day to the next, we noticed we had nothing, literally nothing. And it was a big motivation factor for me, because the reality of things is that my whole life as a teenager, I either wanted to do two things, The first one was I wanted to play soccer, and I had that dream. And when I realized that I couldn't fulfill that or, accomplish that dream, I went into business. But you want to do something that motivates you every day, and real estate motivates me every day. Real estate was the biggest triumph that I had to deal with, and when I was a kid because we lost everything.
Yeah.
I remember we lived in a great house, and having to lose that house, moving out. I remember my parents were showing the house at the time, and people were coming in, and I had a foosball table in the basement. And then the lady asked, she was like, how much for the foosball table? And I was right there. And that was like my Christmas present, for that past Christmas. And right in that open house, I just turned to her and I'm like, that's not for sale. That's mine. That's not for sale. Not everything here is for sale. And, and even at such a young age, you feel this, this anger.
Yeah.
And, I wanted something that would give me that type of drive. So remembering that is a great motivation for me to look at what I do today, because what I do today is exactly to help people into getting into what was my greatest triumph at the time.
Yeah.
To help. It's, we talk about giving them the dream and acquiring this dream of owning a home, but yeah, it's not just that. But at the end of the day, what we do, both loan officers and realtors, we're almost like their financial planners.
Yeah.
We
gotta help them keep the dream.
Exactly. We don't just here take these house keys, but no, we help them in order to, hey, look, listen, this is the idea now, but in the future, what you can do is this, and you can acquire this so that you can build this. We're almost putting out like a blueprint for a portfolio for their life and what they can grow, and that to me was a great motivation. And especially because what we do, there are some things that are repetition for us. There are, but we still learn new things every day.
Yeah.
So it's a great driving and moving factor. So, that's a little bit about my background story. It's, obviously sometimes, dealing with a certain hardship becomes a blessing in the future for you. So for me, I
think it always does.
100%. I'm listening to what you're saying there. And, I feel like the hardship is really a bridge to the promise of God in your life. Amen. Right? Because, and I know you were a brother in Christ, and I can talk about this, or I could talk about this with anyone really. But it reminds me of a story that when the Israelites were walking around the walls of Jericho, mm-hmm. and they shout out that praise to God, those walls fell down. And it not only fell down, but some scholars tell us that those walls fell down in such a way that they became ramps into the city. You know what I mean?
Yeah.
So all of that to say that God never lets you lose a battle, but he never wastes one either. If you're on a winning team, you know that whatever you're going through is just a bridge for your promises.
100%.
And it depends how you're gonna react to that. What's gonna be your approach to the situation? Oh, yeah. You know what I mean? So I love to hear those stories. It inspires me, and I'm sure somebody who will listen to this as well will inspire them, because life is hard.
It's not easy.
Life is hard. And like, I follow a guy named Jordan Peterson. He always talks about that life is not like, drinking margaritas at a beach in Mexico. Everybody's going through something hard. I know what your mom went through. Same thing my sister's going through, like the same thing right now. And I can only imagine what you felt at that time, because it's tough. It's tough, you know. But always remember that we are on the winning team, you know. Yeah. And we need to embrace, those moments of hardship big time. It's very important to embrace it, because if you reject the hardship, you won't grow. And reality is you probably won't succeed. Yeah. And that's the reality of things. So you're right. That's good. We appreciate. You have anything else for him?
No, I'm good.
I know that if we sit here and we talk about these things, we're probably going to be here for a couple hours.
We'll still keep going. Yeah.
We want to save it so you can come back for another podcast. You're always welcome. The doors are always open. And we're going to leave your information here if anybody wants to reach out to Rafael. The information will be here. That's a wrap for us, ladies and gentlemen. Don't forget to like, subscribe, share this channel with someone where we bring you great content every week. And we'll see you guys next time.